Hey guys, Kill Stokes here. Welcome back to another video. If you guys are brand new, usually I start these videos with some type of trading lesson, but seeing how we just wrapped up a 3-day workshop, I'm kind of lessoned out. So if you're looking for a trading lesson, make sure you check out the recordings of the 3-day workshop. They are available in full. You can see on the screen in front of you, there's a little countdown screen that tells you exactly when it expires, so I don't get any angry emails or anything like that. Make sure you also download and take the trader assessment as well as the sample trading plan. All right, so let's hop straight into the charts. Now, do understand I'm recording this Friday afternoon. Now, most of the markets are closed. The US should be the last one that's open, and it's a holiday weekend for us, so yeah, you know, not much movement should happen in the market. But if for some reason things, something crazy happens and your charts look different by the time you're seeing this video, that is why. But I wouldn't expect too much, to be honest with you. Now, we ended the week with a lot of fundamental movement in the market, and I'm not going to get into a whole discussion about that here because I want to keep this video short and sweet. But if you're interested in learning more about, I guess, the differences between fundamentals and technicals, whether it's, what's better to trade, what's harder to trade, what's easier to learn, what takes more time, what takes less time, stuff like that, Jason Greystone and myself had a fantastic conversation in our recent Trader Coffee Break show. So check that out. I'll throw a link in below. You can watch it. It's about a 30-minute conversation, just talking and explaining about the two, talking about the similarities, the differences, and how they could be used together, and how certain type of traders may want to flock a certain way. So go ahead and do that. But we have a lot of bullish movement on the pound pairs, thanks to the Bank of England kind of talking about, hey, we're going to see how this reopening affects things, and we may have an interest rate hike. And we're seeing this movement create a massive rally. Now, the first thing you would think about when you see this big rally is that, I got to hop on the train. The money train is going. It left without me. I need to take advantage of it. But remember what we talked about this past week in the workshop, right? That's what the market wants us to think, right? You don't want to be late because the ones that are late are the suckers. What you want to pay attention to is where are we at in relation to what's important to us on the chart. And for me personally, that's going to be structure. This is that IPDE process we talked about. And you can see that we're slamming right into a VS1 level, and that's going to represent a previous level of structure looking left. I'll show you guys, right? If I zoom out here, it's that top blue line you're looking at. Boom, it's going to come right at a previous level of structure. And if I were to personally draw in my structure line, right, I use these levels as zones, and then I like to draw them in personally because I have a few very specific things I look for, and as far as where in that level of structure I'm looking for. These are the two lines that I'm going to look at. So let's just kind of zoom forward here, see where we're at. Boom, you can see, right, we've crossed that first line. We are right at the top of that second line. So we are at a very key level of structure for me. And we're coming off a high momentum candle, right? Currently, we have a what type of candle, right? For you guys, day 2 workshop. Remember, we quizzed you on this, right? An indecision type of candle. We're looking to read the clues that the market is giving us, right? We have high momentum. We have a little bit of a slowdown caused by, previous buyers becoming sellers, new sellers becoming interested in the market, and just buyers not really interested, new buyers not really interested, I should say, because the market has already moved up to a previous level of structure. So when you look at the combination of those three things, I would expect a little bit of relief in the market. So what you should be looking forward to or looking for as we approach the new week, assuming no kind of crazy news comes out again, is a little bit of relief, right? A move back down, right? And I would expect a move back down to our previous level of structure right here. Again, my opinion in the market is that structure acts like a magnet. As far as making predictions on where price is likely to go, I always like to choose previous or, I guess all the time, previous or most recent levels of structure to make those projections. So keep an eye on pound yen. You go down to the 240 chart, it's going to give you a clearer view of what's happening, the loss of momentum right here. Keep an eye on pound yen for a move back down into that previous level of structure. Looks to be a 1618 Fibonacci retracement, or excuse me, a 618 Fibonacci retracement as well. If I kind of just eyeball this, right at that level of structure. Yep, right around there, actually 50% in 618. So right around a Fibonacci level as well for some confluence. All right, so next up is going to be the New Zealand yen, right? For you guys that attend the workshop, and I'm going to keep talking about this workshop because, again, I want you guys to go watch the recordings. I don't want you guys emailing me saying, Akil, can I have them once they have expired? So I want to put the pressure on you because there's only a few days left to do it. But this was one of the pairs that we analyzed on multiple days of the workshop. And you can see the notes are still on there. What we're looking for is a pullback trade, right? I'll kind of give you a quick summary of what happens. We have ascending triangle happening here. We broke out to the upside, identified a higher high, higher close. We predicted a move to the upside. We predicted that if we move to the upside, where are we likely to go to? Our next VS1 level, this blue box. I kind of put in a little level slightly below that just for my personal level of structure. Again, these tools are tools to help. So I don't personally use the VS1 levels, the boxes, as a say-all, be-all. I use them as kind of a reminder, a tap on the shoulder saying, hey, here's where you should be looking. And then once I have that location, I dial down on the specifics of where I would like to get involved or out-involved. Uninvolved? I guess if I'm in a trade and I'm taking profits, I don't know what the word would be. Outinvolved sounds bad, but you guys get what I'm saying. So the trade is already set up, right? And this is something that's been set up for days. Now we just have to wait. And what you're waiting for is that pullback in the previous structure. So if we bounce down one time frame lower to the 240, you can see that that pullback has started. Right? We may or may not have come down into the zone you're looking at, depending on your risk reward and how you're taking targets. But this is where you're starting to look for your entry, right? Again, is it going to be a higher high, higher close? Or are you going to a lower time frame, taking a double bottom? I don't have my stochastics on here, but let's see if I bring my trading view chart. Is the stochastics dipping from your oversold and back underneath, right? This is something that we looked at as well. We didn't quite get there, so probably not a reason. But these are things you want to pay attention to, right? This is the decide part of that IPDE process. We've identified, we've predicted. Now you need to decide how you're going to get involved in this trade. And honestly, this should be the easiest part. Why? Because this should be the part that's in your trading plan. All you should have to do is refer to your trading plan. It should tell you, right? This is what I need to trade. And again, if you don't have a trading plan, if you don't know what a trading plan is, if you're unfamiliar with it, download that sample trading plan I showed you earlier, right? Just all you have to do is go to www.tier1trading.com. Click the register for the Red Zone Resilience. You can not even watch the entire workshop. Just scroll all the way down and download the free stuff. I don't care. We're putting this stuff out to help you guys. And again, it makes me upset when people don't take advantage of it and it's right there for them. I really hate it. So decent opportunity here on New Zealand yen. Again, looking for 81, so plenty of room to the upside, about 140 pips from where we're currently at, 130 pips from where we're currently at. Certainly one to look at for the week ahead. Now, lastly, we're going to look at the Aussie New Zealand. This is going to be another trend continuation type of trade similar to the New Zealand yen. Before we do that, guys, I forgot to say this earlier. Big thank you for all the support. We have recently dropped episode 500. One hand, 500 of the Trading Coach podcast. I don't know how we got there so quick. I don't know how I kept up the energy to do it. I don't know how you guys have not gotten bored of me after 500 episodes, but we did it. So thank you so much for the support. I'm excited to do another 500 and get to 1K whenever that happens, but it's been an amazing journey just sharing my stories with you guys, sharing my lessons, answering the questions that you want to hear. The feedback that you guys have given has been amazing. I never thought it would be this way, which is humbling and I'm honored, and it's pretty cool. And I kind of get emotional and talk about that in the 500th episode. So I'll stop and just let you guys listen to that. But appreciate it so much, guys. Thank you so much, and keep the support up. Now, Aussie dollar, right? We're in a trend continuation opportunity. This is one of my favorite trades, right? Nice cipher hitting over there, by the way. Aussie New Zealand. So the first thing, or what we have recently done, is we've broken a previous level of structure to the downside right here, right? Where I'm aiming for is my next VS1 level, right? The big purple box down here. So you can see there's a fair amount of movement that can happen. What we did on a lower time frame is we started to retrace, and now we're working back down. And you can get a clue of that by this candle, right? Remember we taught you guys how to read candlesticks? What type of candle is this currently? Even though it's green, is it a bullish candle? No. And if you don't understand why, go back and watch the recording. But you can see the wick to the upside showing that price moved up, and now we're working back down. So the first strike entry on this already occurred. So If you are waiting for this reversal, congratulations, right? We came down, we had our falling channel. This is a loss of momentum pattern, right? Equipped with bullish divergence here on the RSI. We then came up, we had a nice little 3-bar reversal, high momentum or strong bullish candle right here, indecision candle right here, lower low, lower close, just barely right there. Good entry reason, right? If you didn't get a chance to get involved, it's okay. Wait for a fresh break. Again, there's plenty of room to move to the downside. Let me just kind of put that marker back down there, that VS1 105.80s basically. Right, plenty of room to move to the downside. Oh, maybe a little bit less than I thought. Oh, you know what? I take that back. I was gonna say this. I was gonna say wait for a fresh break, right, and then reset the whole process, right? Wait for a fresh break, and then look for the next retracement and a chance to get back down. But we're already gonna be at the top of the zone, so maybe not as appetizing as I thought. If you did not get involved already, let me just see something real quick. Now, let's put things in perspective. So this is the top of our VS1 level. So this is the most conservative zone. I'm not a fan of shooting for the wicks, the lowest lows. That's, risky in my opinion. Keep in mind, I am a very conservative trader. The lowest I would go is the lowest close, which is going to be right here at about 105.67. So it's not going to offer as much opportunity as I first thought looking at this on a 4-hour on the second strike. However, if you are a day trader, there is still going to be plenty of room. So if you're a lower time frame trader, hourly and below, let's call it that, if we can violate these levels, right, 106 even, which is going to be a tough level to violate. This is an even handled number, right? If we can violate 106 evens, right, without extending all the way down to 105.60s, there still is a pretty decent opportunity to take advantage of this trade. Because again, we're going to get close to that target level. But if you're waiting for a pullback, we are going to pull back, which is going to open up some more profitability for you. So even if we pull back to 106 evens, right, there's still about 40 pips or so of potential profit there. And again, for a lower time frame trader, and nowadays on many of these pairs, which have kind of slowed down a bit, even for an intraday trader, like an hourly trader, 40 pips is more than enough. So not as good as an opportunity as I thought. I apologize, guys. I still think it's a good lesson, a good example of a trading opportunity. I just thought there'd be a little bit more meat on the bone for the second chance entry if you didn't get a chance to catch the first one. So that's it for this week. Remember to do those 3 things, like, share, subscribe, check out the workshop, listen to episode 500 of the Trading Coach podcast, and check out the Trader Coffee Break with Jason Greystone and myself. I gave you guys a lot of homework, but you got a lot of time to do it. You guys are hungry for success, so I know you're going to. So, who you got in the Champions League final? Type it below.